Hi, I'm Taylor Pankratz, president and founder of Holistic Planning, and today we're going to talk about why do companies willingly lose billions of dollars in revenue over social issues? And I think the answer might surprise you. Most people look at Disney, Target, Bud Light, and look at their latest social activism and think, why would a company do that? Why would they be willing to risk alienating a majority of their customers over social or political agendas? It just doesn't make sense. But I think once you peel the onion back a little bit, the answer lies in how the asset management world works. And so let's dig into that. Blackrock is the largest asset manager in the world. Them, along with Vanguard and State Street, are the largest shareholders of every major public company that exists. And you might be asking yourself, how could BlackRock or Vanguard be the largest shareholder of a publicly traded company? And the answer is in how the asset management game actually works. When you buy a BlackRock or Vanguard mutual fund or ETF, let's say you put $1,000 into a BlackRock ETF, you give them the $1,000, they in turn take your $1,000 and divvy it up and buy portions or shares in publicly traded companies. If you buy the BlackRock S&P 500, which owns the 500 largest US companies on the New York Stock Exchange, they're going to take your $1,000 and divvy it up amongst the 500 companies. And that's how a lot of people invest their money. And there's nothing wrong with that. What becomes the issue is that BlackRock or Vanguard, because they're buying the shares on your behalf and you're just owning the ETF, you don't actually own the underlying shares of those companies. They take your shares or the shares that they bought with your money, and now they have the voting rights that go along with those shares. So as you probably know, you own a share in a company, you get a vote on what that company does when they come up for board initiatives, agendas, how they run the company. If there's a motion or an initiative that the company wants to take on, a lot of times they go and get the shareholders to vote on some of the more controversial issues to help them decide which way they should go. The reality is you probably should be voting those shares, but instead BlackRock is voting those shares. So you've got BlackRock and Vanguard and many of the large asset managers using your votes in non-ESG funds to push ESG initiatives onto those companies. And the problem with that is it puts the shareholders' value and the shareholders' interest to the backseat and puts what's best for this ESG movement in the driver's seat. And we have a fundamental problem with that, because investing, as everybody knows, should be about what provides the best return for the shareholder, unless you want it to have these caveats, social issues, governance, environmental things. Unless you want it to have those caveats, it should be focused solely on what is the best return for shareholder value. And so they call this thing that's happening, they call it green smuggling or social smuggling. And what it's really doing is it's BlackRock and Vanguard taking your dollars that are investing into just typical everyday average ETFs and mutual funds that aren't supposed to have these ESG filters on them, and they're taking that money and going and voting for the ESG initiatives onto the companies that you own. So you might be asking yourself, what does BlackRock and Vanguard get out of this? Why are they even doing this? And the answer is probably multifaceted, but they get pressure from the pensions that they run. So if you take the California state pension or the New York pension. You've got the pension fund putting pressure on Vanguard and Blackrock, who run the pension fund, right? And they're going, we want you to be a little bit more environmental or social conscious with your voting across all of the assets that you manage, not just the assets inside the pension funds, but we want you to be a little bit more outspoken on all of the companies that you own shares in. And so that's the rub is you have government pensions putting pressure on BlackRock and Vanguard to do their bidding, to push social issues or political agendas that they otherwise probably haven't gotten passed through the legislative channels or are a little bit more controversial, so they don't even get voted on in a political or legislative environment. They quasi pass them or force companies to put these initiatives out because that's just an easier way to do it, right? And so I'm not saying that BlackRock is evil. I'm not saying that Vanguard is evil. I'm saying that they're controlled by these large pensions that want them to do their bidding, or they'll just take their money somewhere else to some other asset manager that will do the bidding. And so that's the conflict, right? Because these asset managers should be fiduciaries to the shareholders. They should be voting in the best interest of the shareholders and what adds value to the shareholders. And instead, you could make the argument they're kind of looking out for themselves, right? And so there's a fundamental issue there that we're trying to shine a light on and inform people that there is a better way. So Texas was the first state to do this, which is they divested from BlackRock and the TRS pension, the teachers retirement system. And they did that because BlackRock was boycotting oil and gas companies inside the pension. And a lot of states are following suit because what they're starting to see is that the return on investment, instead of it being what's maximizing the value for the pension or for the shareholder, there's this filter of ESG that gets laid upon it. And all of a sudden, maybe the returns aren't as good because it's no longer about finding the best return. It's about finding the best return that fits into these categories or through this filter. And again, there's nothing wrong with ESG investing. We just think that if you're investing in ESG, you should know about it, right? If you're supporting ESG with your money, you should be made aware of that. And unfortunately, what's happening is people are investing in just everyday non-ESG funds, and their money is being used to push these initiatives that they may or may not agree with. You know, it used to be that companies, their purpose was to return value to the shareholders. But there's a shift going on, which is instead of shareholder first, they call it stakeholder first, right? And a stakeholder is anybody that is potentially affected by a company's actions. So whereas before, you know, when the US was being built, it was all about shareholder capitalism, right? That's what built America. Now you've got stakeholder capitalism. And what that's really doing is eroding the return of these companies. And so, because they're not focused on growing revenue and top line numbers, they're more focused on pushing political and social agendas. Just look at the return of Europe's stock market to the United States stock market over the last 30 years. The United States has been focused on shareholder capitalism and has outperformed Europe's, which is focused on stakeholder capitalism, by 3% a year. That's a significant amount of money that we can't afford to leave on the table. What can average, everyday individual investors do? That's what we're really excited about, because finally, right? Finally, there's an alternative to what's going on to this social smuggling that these large asset managers are doing. And the answer to that is Strive Asset Management, right? So Strive Asset Management was founded to be the antithesis of what's going on with the Blackrock and Vanguards of the world. And so what Strive does is they say, we are putting shareholder first in every vote that we cast on your behalf. So just like BlackRock gets votes when you buy an ETF or a mutual fund of BlackRock, like we just talked about, Strive would also, if you buy the Strive ETF, they would also get a vote on your behalf. They are going to put your interest first and not other social or political agendas first. So it's something we're very excited about and can't wait to share them with you. For more information on Strive and their mission of shareholder capitalism, or to learn more about holistic planning and how we can add value to your life, please go to our website, holisticplanning.com. There you can schedule a call with somebody on our team. We'd be more than happy to talk to you. Thanks for watching.